Hi everyone and welcome back to another video of Kiwi Investments. This video will be a continuation from our last video I did about Tiger Brokers. Because Tiger Brokers is now available to us, I thought it would be a good idea to start talking about the markets and some companies that are now available to us which wasn't available before. I'm talking about the markets and companies in Asia. A big difference in the Asian markets compared to the Western markets, which you may be more used to, is the ticker symbols. Numbers are often used as ticker symbols instead of letters. For example, American Airlines, the ticker symbol is AAL in the Nasdaq Stock Exchange, while Singapore Airlines in the Singapore Stock Exchange is C6L. Not much of a big deal because you can just type in the company name into the Tiger Brokers app. I'm just telling you this now so you don't get confused when you start trading in the Asian markets. Okay, let's go through each market that is available through Tiger Brokers. If you watched my last video, you know it's the markets in America, Hong Kong, China, Singapore and Australia. The data I will be going through in this section will be from 2019 because at the time of making this video, that is the latest data published in the World Bank website about these markets. If you want to skip this section and go straight on to discussions about individual companies in the Asian markets, then use the timestamps in the description to skip to that part. But comparing markets will give you a better feel of how these markets are doing. So let's first start off by looking at how many companies are in each market. As you can see, America has the highest number of companies for you to choose from, with over 4.3 thousand companies listed in 2018. Creeping up on second place is ever-expanding China, with over 3.7 thousand companies listed in 2019. Followed by Hong Kong and Australia with around 2,000, Singapore around 470, and then we have little New Zealand with only 123 companies listed in 2019, and that has been declining over the previous years, which I have talked about in a previous video. However, I think this number might be coming back up though. Moving on to have a look at how big the markets are, and we can do that by looking at the market capitalization. So if we get all the share prices times it by the number of outstanding shares, add them all up, convert it to USD and compare them, you will get this graph. And as you can see, America is way up in the lead with about a $30 trillion market, and China in second place with a $8.5 trillion market. But this doesn't say much because this could be for a number of different reasons, such as more companies in the market, more investors in the market, companies being overvalued, or for whatever. So let's have a look at GDP to get a better idea of how these countries are doing. GDP has a lot of limitations, but I don't want to dedicate this video to be about GDP. Just very quickly, GDP is the gross domestic product. It is the total monetary value for all the finished goods and services produced within a country for a specific time period, usually an year. So if you look here, in 2019, America's GDP was recorded at $21.4 trillion. Second largest was China with a GDP of $14.3 trillion. This graph is getting a bit crowded down here, so if we move down a bit to read the figures a bit more clearly, you can see the third largest from the country we have selected from is Australia, with a GDP of $1.4 trillion. Then we have Hong Kong and Singapore around $300 billion, and New Zealand around $200 billion. For investors, comparing different countries' growth rate can be more helpful in making a decision on whether or not to invest in an overseas market, and if so, which one. So instead of comparing one country's GDP to another country's GDP, which is what we just did, the GDP growth rate compares one year of a specific country to its previous year. Instead of using the converted GDP amount, if we use the constant local currency GDP, then we can more accurately calculate the growth rate for that country's GDP. This will tell us how fast the economy is growing within that country. So let's have a look at that. Oh, that's a mess. If we zoom in, you can see that all 6 countries' GDP growth has slowed down. China has the highest increase in GDP in 2019 with 5.59%, a little short from the increase they saw in the previous year. If we go down a bit to read the numbers more clearly, the next highest GDP increase was New Zealand with 2.8%, followed by America with 2.2%. Alright, let's move on from boring GDP talk to interesting and popular stocks in the Asian markets. Let's start off by talking about Tencent Holding, listed in the Hong Kong Stock Exchange. Tencent Holding is a giant conglomerate. It controls a lot and it's almost impossible to list everything that they do. They are the leading provider of media in China, For long-form videos, they are ranked number 1 by mobile daily active users, ranked first news service by monthly active users, number 1 platform for music and literature. They are also the number 1 provider for mobile payment service, second biggest cloud service provider by revenue, biggest mobile browser and security provider. And then we also have WeChat. Let me bring you back. Because WeChat is massive, has over 1 billion monthly users. It's way more than just a messaging app. You can use WeChat to make payments, read and write reviews of products and services, book flights and hotels, basically do anything you want. It's coming close to an app that does it all. Instead of downloading one app for your banking and another app for ride sharing, WeChat has them all directly built into them, and these are called mini programs. Companies may choose to launch mini programs with WeChat because it has a lot of advantages that comes with it, such as sending promotional messages directly to the user, as well as tap into WeChat's customer base of more than 1 billion users. Didi, the ride-sharing app which you may have heard of, is a great example of one of these mini programs. Moving on, if I ask you the question, what is the biggest game company in the world, what would your answer be? Would you have said Nintendo, Microsoft, or Sony? Well, all of these answers would have been wrong. Most gamers that I have asked this question didn't know the answer either, and some even refused to believe it. But it's actually Tencent. Yes, Tencent have their hands on the gaming industry as well. It is the biggest globally by revenue. So how did Tencent make so much money in the gaming industry despite most gamers not even knowing about them? Well, Tencent either invest or buys out major game makers. For instance, Tencent owns Riot Games, the Los Angeles-based company that is responsible for successful games such as League of Legends. Tencent also owns 40% of Epic Games, the North Carolina-based company responsible for successful games such as Fortnite. With owning Epic Games, they also own the Epic Games Store and Unreal Engine. Epic Games Store is where people go to buy games, and Unreal Engine is a software suite where people can make their own games. And a huge proportion of games are actually made with Unreal Engine. Some of those games you may have heard of are Batman Arkham City, BioShock, Borderlands 2, Gears of War, Final Fantasy VII Remake, Dragon Ball FighterZ or Dragon Ball Fighters, however you wanna call it, Street Fighter V, and seriously, the list just keeps going on. Tencent also owns 84% of Supercell, the Finland-based company that is responsible for successful games such as the Clash of Clans. And that's not all. Tencent also owns minority stake in Activision and Ubisoft, the companies that are responsible for successful games such as Call of Duty and Assassin's Creed, just to name a few. Now, with their hands on all of these successful games, gaming still only makes about 33% of the revenue in the latest quarterly earnings report. They are doing so much more. Now, I'm not a gamer myself, and if you're like me, you still may have been a consumer of Tencent through other stuff and not even know about it. Like movies, for example. Tencent Pictures has produced movies such as Wonder Woman, Venom, Kong Skull Island, Terminator Dark Fate, Men in Black International, Bumblebee, the new Top Gun, and so much more. And with everything that they're doing, it's no wonder that their revenue has been increasing by the billions, quarter after quarter. Revenue is different to net profit, as I explained in a previous video, and their net profit has increased by 85% year over year, which is amazing. Of course, there's no investment without risk involved. And the biggest threat to Tencent, I reckon, would be fear, particularly from the Western world. Fear about how big and how much control Tencent has. Fear is an effective way to control people's behavior. We have seen this before with America forcing other countries to ban 5G network from Huawei, while America tries to develop their own, hindering technology growth within these countries and forcing everyone to wait. TikTok was kind of another example of this. There's already rumors about Tencent giving personal data to the Chinese government. Tencent has denied these claims. I got nothing on me to say whether or not if this is true or not true. But I have done enough data analytic papers and universities to know that nothing that we do in the internet is private. For example, you're watching this on YouTube, which is run by Google. Even if you leave this and try to search up articles, the results will be produced by Google. If you don't use Google search, you still might be using Google Chrome to browse the internet. If you have a fake account, it doesn't really matter because it's still easy to link it to who you are. If you decide to get in your car and drive off, Google Maps know exactly where you are, where you've been, and probably can predict where you're going. I don't mind being a small data in a massive data set. Organizations will buy that data and try to sell you stuff because they would think that you are interested in what they are selling. It's up to you whether or not you want to buy it. But yes, fear around this kind of stuff, especially how much control they have, including the personal data, people may not trust one company to have all that control. And as rumors start to spread and get stronger, this may damage the reputation of the company and also affecting the share price of the company. Another company I want to have a look at just very quickly before I go is Citic Limited, listed in the Hong Kong Stock Exchange. This is another massive conglomerate, and I feel like it balances quite well with Tencent, which we just talked about, because Citic focuses on financial services, resources and energy, engineering, contracting, manufacturing and real estate, as well as other businesses in both China and overseas. In most of these businesses, Citic is in the leading market position in China. The financial service spans over banking, trust, asset management, securities and insurance services. The resources and energy segment comprises of exploration, processing and trading of resources and energy products, including crude oil, coal and iron. The manufacturing segment includes manufacturing of special steel, heavy machinery, aluminium wheels and other products. The engineering contracting segment involves contracting and design service for infrastructure, real estate and industrial projects. The real estate segment basically manages and develops sales and holdings of properties. The other business segments focuses on investment and operations of infrastructures, telecommunication services, motor and consumer products, commercial aviation service, and a bunch of other stuff. I don't want this video to go for too long, but other honorary mentions just to get you start thinking about investing in international companies are Alibaba, Ant Group if they ever make it to the public market, Bank of China, Singapore Airlines, Pin An, which is a massive financial and insurance company, AAC Technology Holdings, which makes all the small components, some of which you might find on your smartphones. And as usual, none of this is intended as financial advice. It is just for entertainment purposes, hopefully to start getting you thinking or be open to investing in overseas companies. Because it is very scary to put money into a company in another country which you are not familiar with. Now that Tiger Brokers is here, the opportunity is given to us to invest in Asian markets. If you're going to sign up to Tiger Brokers, please do use the referral link in the description, because 100% of the commission made from that link will go to the charity St. John, as I explained in my last video. If you know someone that is interested in signing up to Tiger Brokers or is interested in investing in the Asian markets, please do recommend that link, because basically I will be getting money from Tiger Brokers and giving them to a charity. So the money will go to a good cause and it won't cost you or your friend anything. The next video will be a tutorial video about the Tiger Brokers platform. See you then.